Here we have the current stock market update for Microstrategy Incorporated, stock ticker MSTR. Before we begin with today's chart analysis, if you find these educational materials to be helpful, please remember to click the like and subscribe buttons and leave your thoughts below in the comment section so that other traders can find this information more easily on the platform. So as we can see here, we have a 4-hour price chart. Each candle on this time frame represents a 4-hour trading period. And as we can see, the stock is managing to sort of maintain itself or hold itself right near those prior all-time highs, which come in at 227.15. Of course, that is the stock's price high from October 14th. And currently, we're dealing with a recent upsurge that has posted highs of 223.15. So we're about $4 away from that overall price level at the moment, and we really haven't seen very much in the way of downside price action. So the candles themselves are declining in size. I mean, they're getting smaller. So what that really does suggest is that momentum is starting to weaken a bit. But if we look at the indicator reading, what we can see is that the stock is attempting to break through that short-term negative trend momentum that was being seen previously. We're almost seeing sort of a bull flag pattern in the indicator reading itself, but we're starting to break above here, and that would be a positive signal then, because that would then suggest that this short-term bearish momentum has now completed itself and would no longer be influencing share prices. Of course, we're not exactly there yet. We do need to see a bit more of a movement to the top side. The indicator reading itself is not yet in overbought territory, so there is still some room here for that RSI reading to move higher, and that would be a positive because that would suggest that this short-term momentum is no longer active. Longer term, we do still have some negative momentum that is influencing share prices, but this is also balanced with the fact that there's actually a longer-term reading that is bullish and has been tested on more occasions. So overall, this is starting to look, I would still call this more of a bullish indicator reading rather than a bearish indicator reading. But you really do want to see this short-term condition here complete itself, because this could be enough to send share prices lower just as we head into that major resistance level, that all-time high. So before we close out the video here, we will look at a bit of a shorter-term time frame. Where this is the 4-hour price chart. So we'll just sort of zoom in here a bit into the 30-minute time frame so that we can see this sort of near-term structure that is occurring and unfolding at the moment. So, as we can see, there is some evidence here that there is a weakening in momentum. I mean, if we look at this prior trend movement here, this first movement was much more forceful. The second movement, has seen some strong upside price action, but we're starting to consolidate a bit here. And the question at this point will be whether or not this is a period of consolidation that will allow the stock to form a base in this area, or if we're just starting to simply see share prices start to roll over in advance of this major resistance zone at 227.15. So at the moment, both arguments can be made. Where we're definitely seeing a slowdown in momentum at the moment. So this does suggest a bit of caution here. I mean, I definitely wouldn't recommend buying in at this point. You would either want to see share prices break to the top side, and then you could possibly use a bullish breakout strategy to trade the stock. I personally don't use those, but I wait for pullbacks and declines rather than upside breakouts. But it is still a viable strategy. I mean, there's nothing wrong with using that type of strategy. Or conversely, we could wait for share prices to sort of pull back into this prior support zone that is still forming right around 185.80. So, overall, we can see that this series of higher lows has maintained itself. We do need to see another high, however, in order to maintain this sequence of higher highs. And there are some questions here about whether or not that will actually be happening. The fact that we are consolidating here at these upper levels does make me think that this is more of a consolidation feature that's occurring at the moment, rather than a stalling point. If we were trading at somewhat lower levels, not really close to the all-time highs. I mean, that recent high here came in at within $4 of the ultimate price high. So, the fact that we're trading at the upper end of this range rather than maybe the middle of the range or the bottom of the range does look to me like this looks more like a more like a period of consolidation that would anticipate another break to the top side. So, that still remains to be seen. I mean, we don't really have all of the information just yet. But to me, that is currently what this looks like, and this is a bit, so that outlook is supported by the indicator reading, which is also more bullish than bearish. So just to close out the video here, we'll look at the reverse argument. I mean, if we're wrong here, the argument then to the downside would be that a break of 185.80 would then signal that a major top is in place. That would be quite a bearish event, especially if share prices fail to retest this 227.15 high. So, for example, if we sort of roll over here without retesting that high and then possibly break through 185.80, that would be the most bearish possible outcome here, because it would really give us a double top resistance zone right in these upper 220s. And then it would also suggest that share prices weren't even actually able to fully retest that prior high. So for me, that would be the worst possible double top type of formation. Some people don't look at it that way. Some people want to see more of an exact double top where both share prices kind of test the same level. I don't really agree with that. I think that you can have some differences here. And then if we fail to test that prior high, I actually think that that's more of a bearish outcome than it would be seen if prices were actually able to retest 227. So of course we're not there yet, and we're not necessarily saying that this is going to be a bearish outcome. But if we do see a break below 185.80 without retesting that 227 area, in my opinion, that would be sort of the worst possible event that could occur with this specific price action. So that really does cover everything. I think here we can quickly look at the shorter term indicator readings. But this is largely looking similar to me. I mean, I think that this dominant view here does remain bullish as far as the indicator reading is concerned, but we are starting to lose some momentum here at these upper levels. We really do need to see a break of 227.15, and that would sort of remove a lot of the bearish arguments. So here's the current stock market update for Microstrategy, stock ticker MSTR. Our High Value Trading Strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.